Hello and welcome to this episode of Nothing Ventured with me, Aarish Shah. Today in the studio with me, I have Helen Goldberg. Helen is a co-founder and COO of LegalEdge, which provides flexible in-house legal counsel services to fast growth companies. Prior to founding LegalEdge, Helen spent over a decade focused on M&A with Evershed, Sutherland and Baker McKenzie, and as sole counsel and European legal director at eSpotting Miva. And then headed up the international legal team for all activity outside the US at CBS Viacom Outdoor. In today's episode, we talk about building a business at the start of the alternative legal services market, understanding the Goldilocks legal principle, the rise of the fractional model in law, and how not to mess up your cap table and IP. We talk about the fact that lawyers aren't just for litigation, how you can heat map your legal work, whether AI will up the legal game or replace it altogether, and how DD can kill a deal when you're looking to exit, and why 50% of deals don't go well post-acquisition. So make sure there's a fit before you push the button. And Helen's contrarian advice: life just isn't fair, but it should be. Let's get straight into it. This is Nothing Ventured with me, Aarish Shah, the podcast where I talk to the people behind the stories that make the venture capital ecosystem go round. I've been working with startups from pre-seed to Series C for the last decade, and companies that I've worked with have gone on to realize value and exit, or raise funds in excess of $500 million. I really hope you enjoy the episode, and if you have a guest that you'd love to see me have on, or you have a comment on any of the episodes that I've recorded so far, do reach out to me on LinkedIn or Twitter. I'd love to hear from you. Let's get straight into it. Helen, welcome to the studio. Really great to have you here with me today. So we're going to dive straight in. You've been operating in the fractional space a smidge longer than I have. You started building LegalEdge with your co-founder, Donna, back in 2010. So it's clear that the fractional model works well for strategic roles such as general counsel, GC, and CFOs. But I would say you were a bit ahead of your time launching back then. What was it that attracted you to the fractional space, and how do you think it's evolved from then to now?
Oh, yeah, that's a good question. So look, we started this in 2010. We had no idea we were at the very start of what's called the alternative legal services market. Mm-hmm. Donna and I both came out of really busy in-house jobs and realised there was a big gap in the market for supporting in-house counsel like we had been. On a part-time basis or for a project basis, and also for all the companies that don't have in-house counsel that should. There's still a big, and we do a big educational piece about what to use in-house counsel for, what to use tech for, what to use law firms for. So we started off really supporting small in-house teams, then realised actually there was this gap, and then the fractional market has grown up around it. So we are quite late on now using the term fractional because everybody gets it, which is really good. But we started off, and we still do a big educational piece about what to use in-house lawyers for as opposed to all the other resources out there.
So let's talk about that for a second, right? Because we see the same thing on the fractional CFO side. There's a huge amount of confusion. Is your accountant a CFO? Yeah. What is finance ops versus strategic finance? When do you hire full-time? When do you hire in-house? Out, like all of that stuff, right? So in the legal space, break it down for me. Like what is best practice, I guess, from your perspective, as you're growing?
Yeah, look, I do. I talk to any founder I can about what what not
free of charge, more often than not, I should add. Yeah,
what not to mess up at the start,
yeah,
and what you can apologise for later on. I probably do that about 3 times a week for founders, mainly because I'm so sad when I come across the same problem over and over again. But there's a few things you should do early on. I call it don't fuck it up. Excuse the language, but just don't mess those things up. Lots of things you can do later on. I've forgotten what the question was, Aarish.
Yeah, just the differences between.
Oh, the differences. Yeah. So there's the stuff that you need to do early on. And then what we find is that people, we call it, I've termed it the Goldilocks principle, Goldilocks legal principle. It's not underdoing it, not overdoing it, because that's really typical. So people either use tech templates far too long, and it's absolutely right to start with those things, but you grow out of them pretty quick. Or they'll go straight for the big law firms, often because your investor or whatever says, oh, you've got to use X, Y, or Z big law firm for everything. Again, super painful. and super expensive and not the right resource. So I do a big talk to lots of people, CFOs, etc., about when to use the right resource for the right job. It's not one law firm for everything. It's not one piece of tech for everything. So there's cap table management, contract management, AI, seed legals, etc. All of these good resources, and then there's your really big law firms, your Mishcons, your Oryx, your Cooley's, etc. Hundreds of them. But it's just don't try and use one for everything. And then we sit really in the middle of that, which is in-house counsel, and that's what as you say, it's about legal ops, legal resourcing, legal budgeting, legal management, business as usual stuff.
Knowing what good looks like, presumably from the providers that you then go out to for outside counsel.
Yeah. Okay. So using the platforms when it's right to do so, using the law firms when it's right to do so.
Yeah, I mean, so I find that really interesting because, as you know, certainly within earlier stage businesses, right? Those with a bit of a balance sheet, bit of cash behind them, often founders and frankly, I think, management in general tend to index towards using one provider because it's easier, right? Easy. Only one relationship to manage. Don't have to deal with, multiple people, or you can go, there is a route to escalate whatever it is, right? So, and most law firms these days seem to be multi-service, right? So they do the whole gamut of everything from incorporation through to M&A, right, and exit and so on, right? So how should founders think about choosing the right legal partner? I mean, how do you know what good looks like?
Yeah, well, look, and this is where legal ops comes into it. It's probably a little bit like FinOps. It's about you as a founder deciding what you should be doing and when you should be outsourcing. So I talk to lots of businesses saying, look, you are doing the legal ops side until you can outsource that. Just like you're wearing the marketing head and the sales and, all the other things, tech, whatever it is. So you have to decide what's right and when, early stages. And those are the things not to mess up. Focus on these things. And then as you start growing, so we typically get involved when a CEO, CFO, COO has a list of stuff that a number of them are managing and just going, we shouldn't be doing this.
Yes, it's outside of our domain of expertise.
Exactly. Yeah. So that's when they hand over. That's when, and we talk about the legal function. It doesn't matter if it's one person or 10 or, an external law firm or not. It's about having a good legal function from early on that can grow with you so that you can kind of just hit those milestones and go, okay, we're sorted. And we talk about this a lot. It's about getting ready. I come from a due diligence M&A background. It's about making sure that you're ready for those milestones when you go through them, because those are the sorts of clients we work with a lot.
Yeah.
So it's just making sure that's smooth, making sure that their cash runway, can see them through to that next stage.
Yeah.
Without them getting too close.
Yeah, getting the kind of milestones right and understanding how they get to and then surpass them. And then I guess, and we're going to talk about kind of M&A a bit further along in the pod, but in terms of kind of the whole fractional piece, as I said, like you were early doors. And in those days, I mean, it's very similar. I always say, when I started doing this stuff in 2017, fractional was not a term that existed. No. We talked about portfolio FDs or portfolio CFOs, right? Maybe even part-time. Like it was still very much kind of A, driven by the private equity sort of space, but B, also by traditional employment, right? Like that's how it was framed. Whereas now I think this sort of fractional methodology and almost kind of the gig economy side of things has grown pretty prevalent, like across a lot of things. I mean, I have a lot of thoughts, as you know, as to how valuable some of those are and some of those and whether they really work fractionally or not. But I tend to think that legal and finance both work pretty well fractionally. How have you found it from the lawyer's perspective? So obviously you have a team of fractional lawyers that work with you. Like how easy has it been for them to transition into that fractional?
Yeah.
And also, is it something that they had an expectation? Well, this is how my career now goes, or is it I'm going to dip into this for a year or two and then go and look for something? I'm how have you found? Have they embraced it, I guess, right? Yeah. Is it because law always seems to me, it has always had this very clear structural setup of partnerships, law firms, partnerships. But, I spoke to a number of friends of mine who've been in law since we graduated or whatever, and they are struggling to get on the partnership track either because maybe they're not rainmakers, they can't bring in the money, or because you are filling essentially dead man's shoes, right? There isn't room in the equity partnership for you to come in, right? So fractional is fractional kind of a response to that? I mean, I'm just intrigued.
Well, and what I love is talking to founders now who go, yeah, I understand the fractional model immediately, which is, and I'm sure you get this as well, which is just a delight. And that they and they have a good experience. Yeah. And it's really important for us to give that same really good experience. So we are very, very good at hiring people who are right for this. They have to have set up a legal function. And that's what they're doing over and over again for our clients and educating them and making sure that we're working with them. From a career point of view, I think it's really interesting because you're right. Legal has been, in my humble opinion, a broken model for a very long time.
Finance as well, yeah.
It's insane. You can't, when I joined a law firm, it was like, well, you just make partner eventually. And then you get further and further along and go, oh, actually, is this what I want? Or actually, am I going to make it? Because not everybody can. And also not everybody wants to. The only alternative, say 20 years ago, was to move in-house. And it was seen as a little bit of a sideways move.
Yeah, a bit of a cop-out.
Yeah. Whereas now it's entirely changed. It's seen as a really good career move and a really exciting one. The slight problem is that people think the grass is greener. So they go over to in-house, they realise it's an entirely different job and they're not trained for it. And quite frankly, that was me. I met with my old first boss recently, a really great GC, American GC, and I just went, look, you shouldn't have hired me. I was straight out of Baker's as an M&A lawyer and got thrown into an online advertising company, and I got asked about employment law and VAT in my first day. I had no idea what I was talking about. But you learn on the job. Yeah. Anyway, I don't hire people like me. I will not hire anybody that is straight out of private practice.
So it mirrors the finance world incredibly because it's exactly the same thing. The worst people to bring in-house are people who have done nothing other than work for, KPMG, PwC, etc.
It's such a different job. It's entirely different. And I say that
it's advising versus doing, I think, is like the main thing, right?
Yeah, exactly. Yeah. And also just being really practical. So legal ops, first in-house legal is a lot about legal ops. It's triage, it's prioritizing. You cannot do everything perfectly.
It's project management more than anything else, right?
Yeah. As a private practice lawyer, you're trying to do everything perfectly and you do one thing really, really well. And that is all you do for years and years. So that's what they're really good at. So that's why I will help clients buy in a good corporate lawyer to do their exit. Because I've got loads of, good contacts that's all they do and they're really, really good at it. But that is absolutely not your in-house counsel. But having said that, the people that work for us have got a really good work-life balance. And I don't just mean work-life balance. I mean a sort of work-work balance as well. It's a joy to be working with clients that they know they can help. They can have as much or as little as they want. We have people who work part-time, full-time, work from home, work from anywhere. So it's I think from a lawyer point of view, it's really good now to have all those alternatives that we didn't have back in the day.
And last question on this, because I do want to get onto some other very interesting topics, but do you think that the more traditional law firms are starting to clock onto this? I mean, is this the direction of travel for them? Yeah. I mean, it may be quite some time before they get there, but...
No, lots of them have, and lots of them are, which is only a good thing. There are now alternative ways of working for lots and lots of different law firms, part-time, full-time, being part of a consultancy model, being part of an alumni model, more and more in legal tech. I think it's awesome. And I'm not upset that they've clocked onto that fact. I think that's absolutely brilliant.
It essentially broadens the market. It makes it more, it educates people that this exists. It makes it more accessible, but equally price points will vary and therefore everyone will have,
Yeah, but it's about doing the right thing for business at the end of the day.
Yeah. Okay. Well, look, I wanted to move on a little bit. So you work with a lot of businesses in the tech sector, right? So what are the sort of trends you're seeing at the moment? And more importantly, what are the mistakes you're seeing them make, which could have been resolved earlier or even avoided had they taken good advice from the outset?
Yes. Okay. There's a couple of things that I have. That the startup conversation is the one that gets me most heated because I have it so often.
I have seen you, yes.
Yes, but I see it too late on, which is, where people try and do things without good advice. As somebody said to me, multi-exited founder said a long time ago, everybody needs a decent lawyer and a decent accountant behind them.
Yeah.
The right one as well. But it's actually just important to get a bit of good legal advice and good financial advice early on. So the stuff that I see messed up time and time again is cap table and IP. And I bang on about these because it's the stuff that is very, very hard to get fixed later on. So it's kind of just important just to get it sorted out nice and early and then forget about it, and that's fine. So that's startup, scale up. And this is the other side, is as people are scaling, it's that sort of trying to handle too much across the team. And also, I think, not realizing, so I do a big piece about lawyers aren't just for legal work, and they're certainly not just for litigation. They're for keeping you out of court. And they're also, a lot of what we do is speeding up deal closure, which I think people wouldn't necessarily expect of lawyers. But actually, any good, particularly in-house lawyer, is going to be helping you get your contract sorted and out the door quickly and efficiently.
Hasn't been my experience recently.
Oh, that makes me cry. I'm sorry.
Sadly, it's not on our side, but anyway, or maybe not sadly. But yeah, no, look, I mean, so I think a couple of things there, right? So I think that point around having the right legal / financial advice day one, absolutely massive advocate for that. When I set up one of my businesses, the first phone call I made was to you and your team. We incorporated and had all of our investment docs written up by you guys, all properly sort of dealt with, because I didn't want to have issues down the track. And I just knew that, you guys would do it properly. And I'd obviously worked with you in the past as well. But so what are founders doing instead?
Well, so, there are platforms and technology, so which are fine to use to a certain extent. And again, I go on about these. Use things appropriately. Yeah. So, for example, use Seed Legals for certain things. There are things they do well and not well. It's the same with template providers. It's the same with AI. I'll use it. Everyone should be using AI now for a quick answer. But is this something that you need to rely on, and that could be really, really serious if you rely on it and it's wrong?
And it's wrong, yeah.
Yeah. So I'm a big one for using the right people. For example, for a share option scheme, or I talk about the heat map. I'm like, right, anything that's in a green zone, don't lawyer it at all. Use the internet,
figure it
whatever.
Out yourself, yeah.
Anything that's in the amber zone, that's what we do. That's BAU legaling. So that's, your decent normal contracting, your customer contracting, suppliers, data protection, IP, that sort of stuff. Anything that's red zone, and by red zone, I mean up here, high value, high risk. That's when you overdo it. And so people often don't get that right. So they're either lawyering too much in the green or not lawyering enough in the red.
Because it looks too expensive here, but they're scared over there.
Yeah.
Sure.
And at the end of the day, most of what we do is an insurance policy.
Yeah.
So it can be hard to show return on investment, unless you're doing something like speeding up deals, in which case it's really easy. And I love doing it.
It's interesting because I always, I write quite a lot about contracts are what you need when everything goes wrong. You hope not to need them, but that's why you do, right?
Yes, and I agree with you. I've just said they're an insurance policy.
Yeah.
However, they do also show and can do lots of other things. So particularly when you're B2C or, D2C, there's something about a good process that I think can be really important for brand value and showing, it is part of a brand's value, I think, to show that you're decent and open and honest and you're doing the right thing and that your contracts are nice and explanatory. Because there's nothing worse than being shamed for having ridiculous contracts. And also investors will need to see that you've got good stuff in place.
Yeah. Oh no, don't get me wrong. I mean, I'm
I know you're a convert.
I hate contracts, but I'm resigned to the fact that I need to have them. So if I need to have them, I'm going to have good contracts in place, because it's kind of pointless having
and sometimes the answer is no, there's no point having one. Because what are you going to do if it goes wrong? I talked to somebody just this morning who was saying, I need to have this entirely covered in the contract. I'm like, what, are you going to sue them? Yeah. If you're not going to sue them if it goes wrong, is there any point in having a contract? Yeah. So it's not always the answer. I've
literally just been having a conversation with a potential client on a similar matter. And so what are you seeing in the tech sector kind of writ large here in the UK? We've we've had a few kind of seismic things happen, change of government, there's some changes to potentially tax laws, which may be coming through. We've had this slowdown in funding. We've had, you and I were talking about this, and again, we're going to talk about this in a second as well, but business closures, M&A activity, exits, etc. Overall, kind of what have you been seeing over the last, let's say, 12 months?
AI.
Yeah.
AI.
But AI in what's like? I mean, AI isn't everyone wants to be AI, or they're using it more?
I would say that. I don't know. About 85% of our new clients in the last 12 months have been called AI or are AI.
Okay.
So it's obviously it's the new big thing. Everybody's jumping on it, and it's very exciting. We're using it. Somebody said to me a while ago, AI will do away with lawyers. It won't. But if we don't use AI, we won't have as much work.
It's a quick question there, right? Because again, this is something that I've thought about or think about quite a lot. And I agree, right? Like, so AI can't replace, because a lot of what lawyers do and a lot of what CFOs do is judgment based on lots of experience and intuition to some extent. And part of the, it may well have been you, but someone, said to me, there is a reason that, when you go to court, there are 12 people on the jury, right? Because it isn't black and white. There is a judgment call to be made. The question I have for you, though, is this, and just bear with me for a second whilst I try and unravel it. We're seeing, for example, in finance, there are fewer and fewer people entering kind of accountancy as a profession because it's seen as a bit boring, grey, etc. Right? And then there is also this narrative that, well, AI is going to end up automating a whole bunch of stuff. And I agree. All the low-level transactional stuff will be automated for sure. I am sure AI within legal will end up writing contracts to some extent, right? However, the value of a good CFO is being able to understand the nuance between, have we recognized this revenue in the right way or the wrong, or is there room for us to argue the point that we should be recognizing revenue in this way or that way? Now, the problem arises, or the problem I think is that looks like it may well arise, is certainly within kind of finance, because there are fewer people onboarding, there is not then the pipeline.
How are we training
people up? Is that happening in legal as well?
It will. I think it's because as far as I can see, AI is raising our game. AI already writes contracts. It answers legal questions.
One of our good friends has built one of the fastest growing AI big tech businesses.
They've done absolutely brilliantly, and good for them.
Yeah.
So there's so many things it can do, and it can raise our game. But you're right, is you need to know what the question is to ask it, and you need to be able to assess whether it's right or wrong at the end. Anyone can say, please write me a contract that does X, but actually, is it what you really wanted or needed? But it does, I think it raises, like it does in the medical profession. If AI can now read scans, it means that everybody's up here putting their input on top.
Yeah.
So that's the same, and I talk to clients and say, look, it means we can do more for your budget because you had a limited legal budget. I can now do more. So I'll use AI, I'll use tech, I'll use whatever, is right for you. But you're right. It worries me about how we're going to train up people to be good at that. But actually, does it worry me? No, I'm sure we can do that. I just think we can't train people the way we have trained people.
So, and this is the thing, right? So my daughter, as an example, one thing she has been considering doing, she's a couple of years away from it, away from university, but she was considering, do I do law? And I was like, well, I would do a different first degree and maybe do a law conversion or whatever. But even then, I'm not sure. Like,
I know.
In 3 or 4 years' time, like assess at that point. In fact, that's probably a better way of looking at it. But
also, like my training and your training, I'm sure I'm older than you. My training wasn't. I look back and think it wasn't very. It wasn't practical or useful for what I do now.
I wasn't trained, but anyway. Yeah,
but we're all still learning, right?
Yeah, exactly.
So I think you're right. I mean, when people say, should I do law? I'm like, I don't know. But actually, I'd love to say, yes, it's always going to be a really good profession. I mean, it is what we do. It's not 100% law. There's a lot of practical stuff in there, which isn't pure law. It's not giving legal advice all the time. Quite a lot of it is practical. Let's not worry about that. But yes, we do need to worry about that. But
also, and the way I would argue it is both law and sort of finance set you up with a skill set, irrespective of whether you work in those sectors. I mean, if you're a lawyer, it teaches you how to read a contract, what are commercial terms, how to structure an argument, right? Like, these are useful skills to have in the wider world.
Agree.
Outside of law,
and you can go into all sorts of things if you. I mean, look, I did biochemistry and genetics at university. Am I still doing it? No.
I need to give you a call about something different then in that case. But okay, so you're seeing lots of AI. Anything else, like in the kind of tech space in general? Just
Well, I think the startup space is still really exciting. I think there's still a lot going on. Whether there's still funding for it, and I think has the change in government made a difference? I haven't seen anything yet. Has Brexit made a difference? Yes. Yeah. We used to be the stepping stone between the US and the rest of Europe. And I think people are going around the edges now. There's just no need to come through the UK, not just financial services, but all sorts of businesses. And that makes me sad. We used to be the place to go.
Yeah, I mean, lots of reasons to be sad for Brexit from my side. But it's interesting, again, Andreas Klinger, who's been spearheading this sort of European acceleration, the two things that he suggests that will really up Europe's game as a startup destination. Two things: have a standard European entity like a Delaware Inc., right? So you're not having to incorporate in German.
We tried that years ago.
Did we?
Anyway, yes. Sorry.
Okay, well, we'll have to talk about that in a second. And the second thing was learn English, right? This was his thing to all Europeans. Said, look, at the end of the day, the US is, as a lingua franca, English is obviously
still,
and for law and for everything else, right? So, but more so for startups, you are ultimately almost always going to have to expand into an English-speaking jurisdiction of some nature. If not the US, then possibly the UK or Australia or wherever, right? So it is really important, but
that does feel like a very Americentric way of looking at things, though.
It does, but I think
there's still a lot of money there. I get it.
No, but I think it's also a case of if you are a German business, or not even a German, if you're I don't know, if you're a business based in Estonia, right? Like, there is a limit to the market you can attack. So at some point, and I think. I don't think it's done from a bow down to the Brits or to the English speakers. It's more a case of
it's nothing to do with us. It's all about America.
But let's just be practical about it. But what? So when did we try this European?
Oh, don't get me started on that. But I think it's doing business in America is still quite complex.
Oh yeah,
as well.
for sure. It's 50 countries.
Yeah, and I exactly. I said, I've had a boss from America once who once said to me, "How does that work in Europe, Helen?" I'm like, it's all different countries, don't you?
There's a few of us out here.
So yes, I think you're right. I think it does make it more complicated, and I still think the UK is a really good place to do business. It's got the benefits of America and the benefits of Europe without any of the most of the complications of either, thankfully.
I mean, look, again, this could be this could be a very rambling podcast if we were to put it this thread too hard, but I think there is a sentiment out there amongst people that I know, whether it's investors, that's angels as well as VCs and others. There is a sentiment that is, we know we could be amazing. We know that this country has a huge amount to offer, real potential, but successive governments, not just the newly franked Labour government, have not, quote unquote, exploited that potential as well as could have been done. I was at a couple of, so I spoke on a panel in Leeds with Mercia, and then I spoke on Saturday in Birmingham at NeoFest, and the topic was the topic I was speaking on Saturday was the gender funding gap. And actually, as it turns out, there were no women on the panel. There were meant to be, but I think they weren't able to attend at the end. But
don't start me on why.
Well,
were they looking after the kids while everyone else was? No, sorry.
I can't. I couldn't tell you. I didn't organise it, but the and NeoFest in itself was predominantly aimed at sort of African, Caribbean sort of founders and community in general. So obviously the conversation ended up not just being about the gender gap, but the overall gap, right? And it was interesting. I read some statistic recently from Crunchbase. In the first half of this year, out of a purported $79 billion, this is in the US alone, out of $79 billion invested, only $228 million went to Black founders. That's 0.3%, right, of the total funding. It feels like the UK, which has been progressive in so many areas, could do really well to address some of this stuff, right?
We're still backwards. We still have a class problem. We still have a snobbery problem. We have it in legal. We have it in finance. We have it in VCs. We still have a problem. Yeah, it is always going to be a problem.
Yeah, it's sad. I think at one point I wrote on Twitter, what we have this habit in the UK of poo-pooing sort of new wealth, right? Like we tend to have huge amounts of respect for some guy who inherited from 6 generations
or
ago.
who went to Eton,
or went to Eton, or whatever it is.
Or both.
Not to be too lefty progressive. Liberal lawyers. Definition of a lefty liberal North London lawyer. But
in America they don't have this, or maybe they do. I don't know.
Well, they have a deference to I think the blue blood sort of East Coast kind of Bostonian, and you see that in their politics. You have the dynasties and so on. But no, I don't think it is quite the same. I think there is a greater, whilst there is disparity, I think there is a fair go mentality there. Although the numbers still suggest that massively underfunded. I mean, 0.3% to Black founders and less than 2% to female founders, right? But it feels like there are a lot. I mean, like we could learn a lot about what we could be doing better. It feels like that hasn't quite happened here. But look, I live in hope. Eternal optimist over here. So we should.
I don't know what the answer is as to how we do that better.
Yeah.
Other than we need people in important positions who are positively supporting and not allowing that sort of snobbery or discrimination to get the better of them.
Yeah. Well, and actually, just to close off on this, because I don't want to ramble about this for too long, but the thing that I'm seeing at the moment, and this is the bit that's kind of depressing me a little bit, is we seem to be, we had one party that was like, we don't want to do anything in case we're going to annoy our wealthy constituents. We have another party that's basically saying we are going to do something, but rather than bringing everyone to the same level by lifting people up, we're going to drag some people down and kind of meet somewhere in the middle. And that feels to me like the wrong way. And this is triggering, lots of backdoor conversations I'm having on WhatsApp about very wealthy people considering leaving the UK, right? Like they're just...
Look, I know that's a threat. However, I still think we've got a good balance. We've got, taking it back to the investment world, we've got SCIS and EIS.
Yep.
We've got...
thankfully extended, a month ago?
Yeah, exactly. Yeah. So we've got actually really still quite a good place for people to start businesses and to encourage investment. We're never going to be as big as the States on that. We're just not as big.
Yeah. But we're doing pretty bloody well. I mean, like we're third after the US and China. I mean, like that's not bad.
Yeah, and that's impressive considering that we're however many years on from Brexit, 8 years.
Yeah, and what, a quarter of the size of the US, right? It's pretty amazing. Anyway, listen, we're going to move on because
sorry.
No, that's not your fault. That's my fault entirely. I sadly get a little bit geeky about this stuff. But look, we're starting to see a lot of companies seeking safe and soft landings as the funding market continues to prove difficult for a lot of founders and ventures and actually VCs as well. Our recent podcast with Manish, he talked about how he's returned capital from his second fund because the market just was not there. He had some other reasons for doing it, but you spent over a decade doing M&A work, mergers and acquisition work. So I'd love to get your perspective on what founders on both sides of the table, buy and sell side of the transaction, should be thinking about as they approach a deal.
Look, it's the sort of thing that I think is really not difficult to get right. But that sounds awful, doesn't it?
However, not difficult to get right.
It's not difficult to get. It's easy to get it right, but I think it's hard for people to focus on.
Mm-hmm.
So we do a lot about exit readiness, just sort of getting your ducks in a row before you actually go out there and start looking properly. Because again, the saddest thing I find is when a due diligence exercise slows down or spoils a deal. And that's what I bang on and on about to founders as well, is just not letting something come out of the woodwork, which it does time and time again on due diligence. And which is, so I always talk to founders as if I'm sort of, look, this is what you're heading for, because there's not many that I talk to who don't want an exit at some point of some sort. So you've got to get ready for that and just do the right stuff. So that's why there are certain things that I talk about focusing on, and others that I think you can apologise for later on.
Yeah.
But I don't think really the world has changed on this. Old M&A days, it used to be a hole in your pension scheme. Now it's something else. But there are a lot of things that you don't need to do 100%, and there are some things that cap table is one thing that, as you know, I go on and on about. It's the thing that people mess up the most because they think it's admin, and it's not. It's the stuff that if you can't show who owns the shares and that you can get them from them and sell them to somebody, then you're in a big trouble if you when you get to an exit.
Well, the interesting thing is I recently used one of the pieces of advice you gave me many years ago, I think now. I was talking to someone who's recently incorporated, and I said to him, first off the bat, because he's got 3 employees joining his early founding team, first off the bat, don't talk about giving them percentage equity. Talk about it in numbers of shares, or just broadly that they will receive EMI options via the scheme when it's set up. So just like as an example, why? Yeah.
Well, and there's lots of good stuff out there. Seed Legal's vested. Everybody's got articles on this. And I think it's right. Shares are for co-founders and investors. Everybody else should have options. It's a really good way to control your cap table. Getting shares back is really hard, particularly when you've fallen out with somebody. And you absolutely have to get them back when you are selling. Or, when you're trying
So that would be an instance where it's sort of dead equity, right? Where
dead equity is a great word for it. I love that.
Yeah.
It's really, really common. People start a business. They'd never start it with a thought of, we're not going to get on and one of us is going to leave.
Of course.
A shareholders agreement's like a prenup. I don't know what the numbers are, but 1 in 2 marriages fail. Not sure if it's quite right, but it's something like that.
The one I keep trotting out here is the average VC founder relationship lasts longer than the average UK marriage.
God, that's slightly depressing.
Very
yeah.
depressing.
Maybe not surprising.
Yeah.
But a shareholders agreement is just like a prenup. You don't need anything all singing or dancing, which some people do. It's just about making sure that when you go into this, you have to think one of us might not be in it for the long term. Something might happen. I might need to leave. I might need to go and do something else. I might need to leave the country. I might get sick. I might die. What happens if? What happens if that happens to my co-founder? What happens if it happens to me? And if you don't have that in place and something does happen, it's very, very hard to get investment when you have a dead equity. I'm going to say dead shareholder. That's not quite right. Dead equity. Yeah. It's almost impossible for somebody to come in and say, yes, I want to invest in your company, and for a chunk of that money to go straight back out to pay an ex-founder. Nobody wants that to happen.
But equally, I mean, I think the point I made to this founder specifically was don't talk about it in terms of percentages. Is that because if you say I'm going to give you 5% of the business,
well, because then people turn around 10 years later and go, well, you said I was going to get 5%.
Yeah,
and it's not, because you got diluted.
Yeah. So it's 5. Yeah. So the problem is 5% when and of what,
yes.
and how. Yeah. Which is why it's better to talk in numbers. And sort of conversely, for founders, because there are founders there with a decent balance sheet. There are lots of precarious ventures out there that are kind of ripe for the picking, as it were. So if they are approaching, if they're approaching from the buy side, i.e. they are looking to acquire a business, what should they be? Presumably they should be focused on, is the cap table okay? Are contracts in place?
I mean, look, I'm not going to overdo it. Legal due diligence is usually the most interesting thing that anyone's ever going to do. And
I remember having a 200 question diligence thing to
boring.
go through at one point.
And hopefully it won't throw up any issues.
Yeah.
So, the most important thing when you're buying a business is this right fit? And when I was doing a lot of M&A, there was a statistic out there saying 50% of deals don't go well post-closing. And that's nothing to do with legals. It's just because they shouldn't have done the deal in the first place, or they didn't integrate properly, or they did it for the wrong reason, they did it for emotion, or, whatever it was. I mean, look, last job I did at Baker's was Sony BMG merger. I think it lasted about a year, and it cost gazillions in legal, etc. fees. things are done for the wrong reasons. Legal shouldn't be any of those reasons. What you just don't want it to do is hold anything up or stop a deal going through. So it's not hard just to make sure you've got your ducks in a row when you are looking at something to buy. So just make sure that those things are looked at quickly and that they're all fine.
But again, to your earlier point, it's very much a case of start as you mean to go along, right? Like, this is why I always tell founders, doesn't matter if you're raising today, let's get the data room set up. Let's get it structured in the right way. Let's make sure that the right contracts are in place. Let's make sure we know where everything is in, are your insurances up to date, et cetera, and
having said that, I will quite frankly say to some clients, B2B SaaS, you need to show you're on your GDPR journey. You don't need to be 100% compliant. No, you just disclose it in the disclosure letter. Everyone moves on. When you've got a B2C with a load of teenagers on your app,
you need to be absolutely,
the ICO will come after you. You will be fined, or you will actually, it's not the fines, it's the reputational issue, I think, that could cause a bigger problem.
And just out of interest, have you seen the ICO coming after?
They're coming. They are coming for more and more businesses now. Yeah, but they were focusing on the big B2C to start. You know, quite rightly.
Yeah, the social media kind of sites and so on.
And also, the ICO doesn't want to close people down or fine people. They want to encourage people to do better. The FCA, you're gone if you're not complying with them. So it's about getting the right balance.
Yeah, I mean, there's a couple of businesses that I'm fairly close to that have just had a knock on the door from the FCA, but I think have been working with them and making sure everything is as it should be. But I think this is always a problem with startups, right? Because there's this whole sort of, there is the Facebook sort of move fast and break things attitude that a lot of people subscribe to. And the problem is that obviously different regulatory environments will have different consequences, right?
Yeah.
And
But most of the tech companies don't live in highly regulatory environments, high regulatory environments, unless you're fintech, financial services,
precisely.
You're FCA.
Yeah.
But other than that, most of the companies that we work for are not highly regulated. So there's not a huge amount they need to do right.
Yeah.
But there are just a couple of things that you just don't want to trip them up as they go.
Yeah.
Look, I say to everybody, watch the Social Network. Was it the Facebook film Social Network and Silicon Valley?
Yeah, Silicon Valley's the best. But
watch those. You're done. Because it honestly properly goes through. Silicon Valley, I sit there with my partner who's a techie.
I love it.
And we just go, is that right? And he's like, yeah, that's the tech. And then the legal, apart from the guy who's playing the guitar, I've never played a guitar while giving advice. But, that's the VC's lawyer thing anyway. Apart from that, all of the legal problems they go through are absolutely start-up and scale-up problems.
I think a lot of people, talk about Silicon Valley it gives them PTSD because it is so on the nose. I mean, I watched it again relatively recently, maybe 6 months ago, and I was just okay.
It's still so
I'm going to record
good.
that and put it on, put it on social.
Yeah.
Look, just before we close off, I have one final question for you, if I may. What is one thing that you have a contrarian conviction about from any area of life, work, politics, socially, or at home? What's the hill that you would die on?
Oh, life isn't fair.
Okay. Okay. Is that contrarian?
Life isn't fair. No, it does. It drives me mad. I can remember my mum saying to me as a child, Helen, life isn't fair. And it still drives me mad. I still don't understand why it can't be fair. I think everybody should start. Have you seen that video where kids start that race, right? Step forward if, or step backwards if.
Yeah.
That drives me insane. I just think we've got, particularly in this country, but, in the world, there's so much that people can do and should do, but there are things that hold people back, and that's not fair.
Yeah.
That drives me insane.
You should watch the episode we did with Piers Linney. He's very heavily involved in DEI, and he says, look, equality is being invited to the party, inclusion is being asked to dance. And I thought that is just such a lovely kind of way of thinking about it. But yes, I mean, look, and I always say this podcast is not a diversity podcast as such, right? But anything that we can do to get that message out there. And look, I think the thing that people get wrong about that whole sort of space is it is not about demanding a place whilst denying someone else.
I agree with you.
It is about equality of opportunity. Everyone should have the same opportunity to apply for the job, to go to the university, to do whatever it is.
And also just having a bit of empathy.
Absolutely.
It's not about saying, right, you can't be at this table because you're a middle-aged white bloke.
Yeah.
It's just about, let's just think about what else we can add to this.
Yeah, maybe if there are 50 middle-aged white blokes, maybe we could do with having, a younger white woman or a black person or even an Indian, let's say. But no, look, I mean, I completely get it. But listen, Helen, it's been absolutely wonderful having you on the podcast. For the audience, where is the best place for them to find you online? Are you on LinkedIn, Twitter? Where can they find you?
Yes, I'm on LinkedIn, on our website, LegalEdge. I'm always happy to talk to people, particularly startups and scale-ups. That's what we really like to, who we like to work with.
Amazing. Thank you so much for joining us. It's been an absolute pleasure.
Thank you so much, Aarish.